All right, so it's currently tax season, which means that all of you are going through and looking at your past expenses, checking out that W-2 to see what you paid to income tax, state income tax, Social Security, Medicare, all the things that are being deducted out of your paycheck on a monthly basis. Well, by owning a business, you can minimize that federal income tax and increase your income on a yearly basis just by writing off business expenses and potentially owning real estate, which will allow you to write off depreciation on that property. All right, so what is depreciation? Well, the federal income tax code allows you to write off the depreciation on a property that you purchase as an investment. So, if you buy a single family home and rent that property out, whatever the purchase price of that property, let's say it's $100,000 minus the land, let's say the land is worth $20,000 and the house is worth $80,000. You're going to take that $80,000 over the life of your ownership and subtract it from your income taxes. Now, there's a few different ways that you can calculate it, but the most common and simplest to calculate is the the straight line depreciation. And this is simply taking that $80,000, dividing it by 27.5, which will allow you to write off that value every year for the next 27.5 years. At a minimum, if you had a business and put 1 or 2 or 3 properties in it, the depreciation on each of those properties, you're going to be able to write off on your W-2 income. Now, you've also got potential mortgage interests, your insurance, any kind of repairs or services you have on the property, all these things that are going to be on that Schedule E of your tax return, you'll be able to write off on the income generated from the property as well as your W-2 income. Great way to save money on an annual basis. Now, if you have a income producing hobby, that's great. You're going to be producing some active income by putting it into an LLC and beginning to write off those expenses. If you are an artist, if you are a performer, whatever, maybe you have to buy camera equipment, recording equipment, paint supplies, whatever it is, you can write all of these things off and start saving more of the money that you generate as income.